Okay, well, hello everyone. Good evening. And my name is Prem Sikka, and it's my pleasure to be able to have a chat with so many of you. I'm especially grateful to Joanne Welsh and Anne Fenner for arranging this. And I'm a little bit, how can I put it? Little bit afraid of speaking, in a sense, to such a dynamic group, somewhat overawed by this, but hopefully you will bear with me and as I speak. So at the end there will be some time for questions. What I'm going to do is take you through what I call the UK's regulatory maze. We have so many regulators, yet they are utterly ineffective. Why is that? Where is the evidence? Well, the evidence for that is all around us in everyday newspapers. So, for example, if last week you looked at the newspapers, they would have reported that the Parliamentary Security and Intelligence uh, Committee said that London has become a center for global money laundering. Though they were referring to Russia, actually it is a international and a global money laundering center. All the world's rivers of dirty money seem to come up to the city of London. And they especially said, if I may quote from that report, which is dated 21st July, that lawyers, accountants, estate agents, and PR professionals have played a role wittingly or unwittingly in the extension of Russian influence, which is often linked to promoting the nefarious interests of the Russian state. In other words, accountants, lawyers are available for hire to the highest bidder. All that matters is the money they make. And the phrase used in the report is London grad. London grad is now a global center for dirty money, and that dirty money comes from fraud, money laundering, theft, narcotics, human trading, organ trading, almost anything and everything that you can actually think of. However, this itself is not necessarily news. It is not new news. There's been plenty of evidence over the years that the professionals have been involved in this murky business, but there is very little action from the regulators, even though we have a multitude of regulators. Successive governments have been happy for accountancy law trade associations and other professional bodies uh, to regulate their members. And again, let me just read out a report. This is from what is called the Office for Professional Body Anti-Money Laundering Supervision. Quite a mouthful. It is housed within the FCA, which is the Financial Conduct Authority, and its the responsibility is to oversee the accountancy and law bodies which are responsible for regulating their members in relation to money laundering. And here are the words. It says the accountancy sector and many smaller professional bodies focus more on representing their members rather than robustly supervising standards, partly because they don't believe or don't want to believe that there is any money laundering in their sector, partly because they believe that their memberships will walk if they come under scrutiny. We were told, particularly in the accountancy sector, that professional bodies believed their members would leave if they took robust enforcement action. Despite this, there is absolutely no action from the government whatsoever. So, what are the chances of UK being able to shackle uh, accountants and lawyers in the world of money laundering? The answer is not very good at all. And this has been a persistent problem. One of the key requirements for regulating money is a company, what is often called a shell company, which does not really trade, but vast amounts of money passes through its bank accounts. Over the years, I have come across many companies of this type. A company is incredibly easy to form in the UK. You can form it yourself, will cost you less than £20, or you can get an agent to form it for about £100 or so. So when you file information about a company when you first form it, there is absolutely no check. Anyone from anywhere in the world can form a company in the UK. The directors can be anywhere in the world, and directors may use a false name. They may give a false address. There is no check on the authenticity of the individuals who claim to be directors or shareholders. So much so that one mafia convicted criminal from Italy formed a company. He gave his name in Italian, and when you translated it into English, he said, "My name is the chicken thief." He gave his occupation in Italian. When it is translated into English, it translates as fraudster. And the address he gave was the Street of 40 Thieves, Town of Alibaba, Italy. Okay, so that is the address he gave. And year after year, that information is filed at Companies House, and that information is accepted. So one day I decided to put this convicted mafia criminal's name on the Companies House database, and out came a bank. This individual had actually formed a bank. It was called the Business Bank Italy Limited. And they had a website on which they were inviting people to make investment. Now, what kind of investment people made or whether they've been fleeced, I do not know. But the regulators did absolutely nothing to deal with that until the matter was raised in the House of Commons by a senior Labour politician. So that kind of thing again goes on year after year, and nothing whatsoever is done. So when the business secretary is asked in Parliament, why don't you do something? Why don't you change the law? And his response, if I may read out to you, his response was, Companies House does not have powers to verify the authenticity of company directors, secretaries, and registered office addresses. So there we are. We have it from the horse's mouth. So what the UK is doing is attracting all kind of criminal and other elements who are busy forming companies and hiding behind companies. If you don't know who's behind a company, you can hardly enforce anything. And if the directors are in another country, you can hardly enforce British law. So again, this problem is set to continue. Banks have been serial offenders. They have missold almost everything that you can imagine, whether it is pensions, mortgages, endowment mortgages, capital bonds, precipice bonds, payment protection insurance, anything else. This has gone on for as long as I can remember. UK has had a banking crash in every decade since the 1970s. Banking crashes of various kinds. In the 1970s, we had a secondary banking crash, which revealed wholesale fraud. In the 1980s, we had the Johnson-Matthey crisis. In 1990s, we had the Bank of Credit and Commerce International, Barings, and others. Then we had a huge crash in year 2007 and 8, which required the governments to bail out the banking sector. At the height of that crisis, the government provided, and these figures may interest you, guarantee commitments of £1,029 billion. They provided cash to the banks of £133 billion. In addition to that, they used quantitative easing, which is a form of money printing, of £435 billion. Now, again, this crash was not caused by any run on the banks. Deposit takers did not run to the banks and said, we want to get our money out. It was caused because of speculation. And the prime evidence of that came through Lehman Brothers, Bear Stearns, and many others. And those entities still misbehave. Today they are known as hedge funds and private equity. The size of hedge funds and private equity is bigger than the size of retail banking, and retail banking is regulated, but shadow banking is not really regulated. So we have huge amounts of money coming to and from entities such as hedge funds and private equity, but they are really beyond regulation. There are no stress tests carried out upon them. There are no capital adequacy tests which are carried out on those organizations. So after the 2007 and 8 crash, what actually happened in the UK? Did the government really go after the bankers who crashed the economy and gave us a never-ending austerity? Well, here are some interesting numbers. In Vietnam, they prosecuted 46 bankers. In the United States, 324 bankers. Iceland, 36. UK, a grand total of 5. Just 5. Now you can see why the banks are on a winner. Basically, you can crash the economy. The government gives you even more cash. They're still fairly lightly regulated. And again, I will go through the regulatory structure in a moment. We have had long-running fraud sagas at banks. 2 or 3 good examples. One is at the Royal Bank of Scotland, and second is HBOS, now part of Lloyds Bank. At these banks, there is evidence and also further allegations that these banks put innocent businesses, especially small businesses, into liquidation. Often it is argued that sometimes perhaps the signatures of the people were forged, the documents were forged, or they were persuaded to accept loans, etc., which were not really suitable for them. So that has gone on for many years, and the regulators have been incredibly slow to move. More recently, there is evidence that even now major banks are forging customers' signatures. That evidence was provided by the BBC and also many other newspapers. No action by the regulators. They basically are busy aping the 3 unwise monkeys. They just don't see anything wrong, they don't hear it, and they don't want to do much about it. So there is a complete lack of regulatory action. The Thames Valley Police and Crime Commissioner, his name is Anthony Stansfeld, who I met. He prosecuted 2 HBOS bankers, and they were both convicted of fraud. He tried to investigate other banks and other senior bankers, but he certainly was not given any resources by the government. He spent £5 million of his police force budget to convict 2 HBOS bankers, but he could not get the government support to go any further, and indeed he was not really compensated for that £5 million. So he approached the then Prime Minister, Theresa May, also approached the Chancellor, but nobody was interested. So if I may read out a statement which he made, which was published in the London Evening Standard on 8th February, his statement said, "I am convinced the cover-up goes right up to cabinet level and to the top of the city." That is an incredibly strong statement from a police commissioner. And by the way, he's a Conservative police commissioner. He was not a Labour Party one, in case somebody thinks, oh, well, some lefty would actually say that. But he came from the Conservative Party. So despite that strong public statement, there is no parliamentary inquiry, no regulatory inquiry, no response from the government or any minister. Indeed, I met him and I did see some of the documents. And I think there is a very strong case that there is a huge amount of rottenness in the upper echelons of the finance sector. And we have to remember people in the finance sector get paid by reference to the profits they make. And therefore, if you can make profits through illicit activities, that is okay, because regulators will do little. There is almost complete secrecy, and there is a good chance nothing is really going to happen. And if there is an occasional fine, well, that just gets treated as a cost of doing the business. So that is that. And indeed, turn up almost any day. If you turn up and look at any newspaper, you will find some news of some malpractices in the finance sector. The biggest revelation of banking fraud and money laundering in the 20th century was at BCCI, the Bank of Credit and Commerce International, BCCI. It was forcibly closed down by the Bank of England in July 1991. To this day, there has not been an independent investigation. No documents from the Bank of England. There have been parliamentary inquiries, but without access to so-called responsible or secret documents, those parliamentary inquiries can do very little. I wrote a academic paper about BCCI in 2001, and my co-author came from the US, and we got quite interested in this case. My co-author, Professor Patricia Arnold, she visited the Congress Library, and what did she find? There were documents filed in that library which are a state secret in the UK. Those documents provided a glimpse of how the frauds were perpetrated, how the money was laundered, and what else went on. So when the Freedom of Information Law was introduced, I asked to see a full copy of just one document. We became aware that there are tens and hundreds, possibly hundreds of secret documents. I asked to see a copy of one which had a code name, the Sandstorm Report. We already had a copy from the US Library, Congress Library, but we did not know if that was a complete document or something was missing from it. So I put in a Freedom of Information request. I should have received a reply from the UK Treasury within 20 days. I did not receive a reply within 28 days. I persuaded some members of Parliament to ask questions about it, and they were fobbed off by saying the government is still considering it. Some 2 years later, I was told that I cannot see the document I had requested. Well, of course, in this country, we call it a freedom of information, but actually it is not really freedom of information because we don't really know what information is held in the first place. So first you have to guess that there may be some information. So at best we have a right of access, a very qualified right of access. So anyway, I drew a blank with the Treasury. So I went to the Information Commissioner, who was supposed to give me an answer within 20 days. 2 years later, he sided with the Treasury. Apparently, it was not in the public interest for me to see this document, which you would recall, large part or possibly the whole of that document was sitting in the US Congress Library. Well, undeterred, I taught myself a bit of law and I decided I will go to the courts. Well, I took on that process. I was utterly out of my depth because in the courts, the government sent in the lawyers for the Treasury, very well-known QCs, and the Information Commissioner sent in lawyers as well. And they really made mincemeat out of me because I did not have the necessary background. But I actually plowed on and I chose the ground on which I want to fight. As an academic, I can always theorize what public interest is, why it is good. So I chose that ground to fight. To cut a long story short, some 5.5 years after the initial request, 3 judges unanimously ruled in my favor, and the government had to release the document I had requested. So what were they actually concealing? They were concealing the names of some key individuals who were connected with Al-Qaeda, Saudi intelligence, and other people from the Middle East who apparently looted BCCI with the full approval of UK government. Money was laundered. The Sandstone report should have appeared on a government website after they released it to me, but the government chose not to put it on any of its websites. However, if you search with my name, followed by the Sandstone report on Google, you will see it. It is on it. It is certainly there. So if we don't investigate cases of banking fraud and money laundering, what exactly is it that we learn about regulation? We learn very little, next to nothing. And that means people suffer. Okay, people's savings, pensions vanish. People's confidence in the financial system vanishes. Bankers don't fear anything. So nothing is really learned. So again, I will come to the regulatory apparatus in a moment. Tax avoidance and tax evasion are frequently in the news. HMRC's most recent report admits that last year it failed to collect about £31 billion of taxes because of what it calls tax avoidance, tax evasion, and other reasons. In earlier years, that figure was around about 34 to 35 billion pounds. So that means in the last decade, since 2010, possibly up to 350 billion pound of taxes have not been collected by HMRC's own admission. However, that number is a gross underestimate. Other models suggest that the annual tax gap, that is the difference between tax which is collected and which should be collected, is not 31 billion or 35. It is somewhere between 58 and 122 billion pounds a year, because HMRC's numbers do not include taxes avoided on profits which are shifted by multinationals. So a good example, I was advisor to the House of Commons Work and Pensions Committee for investigation of the collapse of BHS. So as I looked at BHS, I found a number of intra-group transactions. Just one example would suffice. BHS sold a number of its properties to a company in Jersey. That company's sole shareholder was Lady Green, who was also the biggest shareholder in BHS. Lady Green herself was resident in Monaco, which levies no income tax. So, of course, BHS having sold the properties to this company in Jersey, effectively Lady Green selling the properties to herself, so there's no outside cash involved. So BHS needed those properties to trade from, so therefore those properties were leased back to BHS. So BHS then pays rent. Their rent becomes a tax-deductible expense, and thereby reduces BHS's taxable profits. On the other side, in Jersey, that rent is not taxed because Jersey does not levy corporation tax on the profits not made on the island. Jersey company then pays out a dividend to Lady Green, who's resident in Monaco and not liable to pay any tax. All these transactions are absolutely lawful in the UK. There is absolutely nothing wrong with them. But the point is that they result in avoidance of tax, and those kind of tax avoidance transactions do not form part of the HMRC's estimate. So HMRC itself has been under severe attack. It has very little capacity to perhaps act. In 2009, it had 76,381 staff. The last report showed its staff was about 64,000. Its budget in 2010 was 4.2 billion, and last year that was 4 billion pounds. So that is a huge cut in real terms. Okay, so HMRC does bring cases against companies, and sometimes it is very effective in bringing those cases. But HMRC is fighting the tax avoidance industry, which crafts novel ways of shifting profits, novel ways novel ways of avoiding taxes. In 2013, there was an inquiry by the UK House of Commons Public Accounts Committee, and this inquiry focused on the role of the big accounting firms. Before the inquiry, I was contacted by a senior person, who worked for PricewaterhouseCoopers in the past, very senior, and I had never met this person. I got a email and a phone call. Could I meet this person? I said, okay. Where were we to meet? Oh, it had to be somewhere there were lots of people. It could not be anywhere where this person could be spotted by somebody this person may know. So we met at King's Cross, St Pancras, which is a fairly busy station. And this person then told me certain things about PricewaterhouseCoopers. So I took the following day this person to see the chair of the Public Accounts Committee, and the Public Accounts Committee chair, that was Margaret Hodge, then heard from this person who was very senior at PwC as to what happens. So let me just read out what Margaret Hodge said during the committee meeting. She said she's met somebody from PwC and been told that it will, quote, approve a tax product if there is a 25% chance, a 1 in 4 chance of it being upheld. That means that you are offering schemes to your clients, knowingly marketing these schemes when you have judged there is a 75% risk of it then being deemed unlawful. In other words, they know that there's a 75% chance if HMRC went to the court, judges will say it is unlawful. But they went ahead because profits were greater than any potential negative outcomes. Well, as soon as Margaret Hodge said that, the partners from the other 3 firms responded that their threshold was 50%. And I think as soon as they said it, they probably wondered maybe they should have remained quiet, shouldn't have said anything. A 50% threshold. Now, can you imagine producers of cars, aeroplanes, food, water, medicine saying, well, we know there's a 75% chance what we are doing is unlawful. It may have deadly consequences, but because nobody really goes after us, let us go ahead and sell those products. Well, there's a huge problem with this industry. When you look at HMRC itself, you will find that it is colonized by partners, individuals connected with big accounting firms, law firms, and big corporations. I did a study in 2016 for the Labour Front Bench, and that study is available online. It's called HMRC, Making It Fit for the 21st Century. And you can indeed look on the HMRC board today, and you will see some of these things. So within accounting firms, people are incentivized to sell tax avoidance. They are trained, and they are set profit and revenue generating targets. If you don't make it, you don't get promoted. Simple as that. But the regulators need to do something. Same accountancy firms advise government departments. They give jobs to past and potential ministers. Therefore, very little happens to them. Every year, 30 to 40% of the finance bill is devoted to plugging the loopholes exploited by the tax avoidance industry, which I called some years ago, and it's become a little bit popularized. I call them the Pinstripe Mafia. They wear pinstripe suits, but they're no different from the mafia, that they're depriving innocent people of pensions, education, security, healthcare, and other essentials for no other reasons. There are many critical judgments by the judges in the courts where they have argued that the schemes peddled by the big accountancy firms are unlawful. And I have a free monograph online. If you put my name followed by the title, The Pinstripe Mafia, you can read about it. And nothing happens to these firms. So to this day, up to 28th July 2020, Not a single accountancy firm whose scheme has been thrown out by the judges by saying it is unlawful. Not a single firm has ever been investigated, fined, or prosecuted by any professional body, any government department, any regulator. That is how good our regulatory maze is. Still, looking at regulatory issues, audit failures are almost regular occurrence. Audit firms have been doing audits, accounting firms have been doing audits for over a century, but they still don't seem to be able to deliver an honest and a robust audit. Many problems have been highlighted at Carillion, which is another case where I advised the House of Commons Work and Pensions Committee. Carillion, BHS, London Capital Finance, Patisserie Valerie, Wirecard are just some recent names which you would have come across in the papers. None of the problems at these companies have ever been highlighted by auditors or the regulators of auditing. They are highlighted because the stench of scandal becomes too strong, and thereby it spills into the public domain. And after it spills into the public domain, somebody then tells us, well, they're going to look into this. So we are still waiting for the accounting regulators report on Carillion. We are still waiting for the insolvency services report on Carillion, and even on BHS. Nothing seems to get done. The UK's auditing regulator is called Financial Reporting Council, and its most recent report this month said that, based on a sample that it examined, it said 33% of that sample, we may be able to generalize from that, is that 33% of the audits delivered by the largest accounting firms are of poor quality. Now imagine if that applied to producers of medicine, food, trains, cars, aeroplanes. Would they remain in business? No, they would not. They would not remain in business. Okay? There would be calls to shut them down. People would sue them. But none of that happens in auditing because the UK's liability laws protect auditors. At best, auditors only owe a duty of care to the company. They do not owe a duty of care to any individual shareholder, creditor, employee, pension scheme member, or anybody else. At Carillion alone, there were 30,000 suppliers who were affected, many of whom were just one or two person business. There were electricians, plumbers, lorry drivers, fitters, all kinds of people. So 30,000 suppliers were affected, losing possibly about £2 billion. There was a £2.6 billion deficit on the pension scheme, affecting possibly 43,000 worldwide employees, of which about 19,000 are in the UK. Even if the Pension Protection Fund bails them out, the maximum bailout is for 90%. And that means all employees, current and future, would face an erosion of their pension rights. Imagine being 70, 75, and a large part of your pension disappears. What are you going to do? There is very little you can do at the moment. Okay? So those people have virtually no recourse against the auditors. All this emboldens the firms. Why on earth do they want to improve the quality of what they do? So KPMG, according to the regulator, 39% of its audits were deficient. Pricewaterhouse Coopers, 35%. Ernst & Young, 29%. Deloitte, 24%. Grant Thornton, 45%. Yet the firms are still raking millions. As I said earlier, I advised the Work and Pensions Committee on the investigation of BHS. At BHS, PricewaterhouseCoopers were the auditors. Their audit partner spent 2 hours on the audit, 31 hours advising BHS's directors. Just 2 hours on the audit. For the day-to-day purposes, The audit was under the control of a person with only 1 year post-qualification experience. And later on, we discovered that really hardly any part of the financial statement was audited properly. Has anybody sued PwC for that? No, because there's very little chance. Indeed, I have met partners from the biggest law firms in the UK, and they won't even take on a case against a big accounting firm because they do business with them. When a liquidator is appointed, liquidator needs a legal advisor, and those advisors come from big law firms. Why do they want to bite the hand that feeds them? So you will be hard pushed even to find a good lawyer to take this on. So now, from just those examples, and I can give you many others, I don't want to bore you, you can see that the UK's regulatory structure is incredibly poor. So we did an exercise. We were asked by former Labour Shadow Chancellor John McDonnell to look at the regulatory system, and you can see the full report. There's a link to it on the Facebook page. You can see it. So we began an investigation. It took about 18 months or so. There were about 13, 14 of us doing it. So we found that the UK has over 700 regulators. Over 700 regulators. 41 of these are dealing with the financial sector, including banks, insurance companies, pension funds. 41 regulators at least. Yet the examples I gave you earlier do not inspire confidence that they are actually doing their jobs. So there are a set of revolving doors. People come from the industry, become regulators. They bring a mindset with them which makes them very sympathetic to the industry. Sometimes the regulators do their regulating and then go back to the industry. So again, that itself is a problem. There are at least 14 regulators dealing with accounting, auditing, insolvency, and some aspects of corporate governance. But the UK has no central enforcer of company law. So we have company law, but there is no enforcer. So I discovered that there were a number of companies who were paying dividends which were actually illegal. Companies actually confirmed that they were illegal because they've been incorrectly advised on certain accounting aspects. So it was not malicious on their part. It is just that they were badly advised. So in Parliament, a question was asked, who's going to investigate what is the full extent of the illegal payment of dividends? Remember, if dividends are paid illegally, that can have consequences. Company goes bust, employees don't get what is due to them, pension scheme members don't get what is due to them, suppliers don't get what is due to them, taxpayers, because HMRC is also an unsecured creditor, does not get the money due to it. So what did the minister tell us? And it is in writing in Parliament. He said, it is not my department's role to examine the illegal payment of dividends. Well, whose is it? He wouldn't tell us whose it is. Okay, so again, problems there. When we look at the world of auditing, it has 5 regulators. These are the Financial Reporting Council, Association of Chartered Certified Accountants, often known as ACCA, Chartered Accountants of Ireland, often known as CAI, Institute of Chartered Accountants in England and Wales, Institute of Chartered Accountants of Scotland. They are all trade associations. None of them were formed with a burning desire to serve the interests of the people at large. They were formed to protect the interests of their members. So they are statutory regulators, but all of them are outside the Freedom of Information law. So we can't even ask them any questions about what they do. So remember, they are named in legislation as regulators, yet they are being treated here as though they were private bodies. Okay, they are not. And none of these owes a duty of care to stakeholders. Indeed, that point has never really been tested in law. They do not owe a duty of care to any stakeholder. If you feel that as a result of poor accounting auditing rules, you have lost your pension, your savings, can you sue these people? Apparently not. What about the insolvency industry? Insolvency industry has a number of regulators. Right at the top is the Insolvency Service, which is part of the Biz department. Then is the Association of Chartered Certified Accountants, Insolvency Practitioners Association, Chartered Accountants Ireland, Institute of Chartered Accountant in Wales, and Institute of Chartered Accountants of Scotland. 6 regulators. Only one, which is the Government Department Insolvency Service, is subject to freedom of information laws. Rest are all outside. None owes a duty of care to stakeholders. Some insolvencies run for years and years. The longest one I came across ran for 24 years. And it ended just when there was absolutely nothing left for the insolvency practitioner to collect, i.e. all the cash had been extracted in fees. Some run for 5 years, 10 years. It goes on and on and on. It is effectively a license to print money, but there is no real accountability. Some of the invoices are seen. Partners charge themselves at the rate of about £1,500 an hour, and that is more than the top surgeon gets per hour in the NHS. But I can tell you we would all agree on who is more needed, one of these insolvency sharks or a surgeon. So that is the situation we have. Money laundering, we have 25 regulators, would you believe? 25 overlapping regulators. 25. Okay. And these include the Financial Conduct Authority, Her Majesty's Customs and Revenue, Her Majesty Revenue and Customs, which apparently is also responsible for regulating estate agents. Not many people knew that. And there is also the Gambling Commission. So there are 3, as it were, statutory bodies. In addition to that, there are 22 other bodies, which are predominantly accountancy and law bodies. And one of these 22, and you would like this, is the Faculty Office of the Archbishop of Canterbury. Apparently, the Archbishop of Canterbury is a regulator for money laundering. I don't know what people do to the tray passed around the church on every Sunday, but Archbishop of Canterbury is a regulator for money laundering. So 22 of these 25 bodies are outside the Freedom of Information net. Where is their accountability to the people? So as we began investigation, our study, we began to wonder. So the bottom line is, UK has too many regulators. They're ineffective. They're overlap. They're captured. They waste. They obfuscate. So this system has to go. You can't have trade associations acting as regulators. They have absolutely no independence, which is a key requirement. And we have also seen a number of instances where the ministers themselves cover up things. BCCI was a good example, covered up by the Conservative government until 1997. And when I began my investigation, which took 5.5 years of legal intervention, that began under the Blair government. So they're basically protected. In the US, HSBC was fined $1.9 billion, which was the biggest fine at the time, for facilitating money laundering by drug kingpins and other unsavory characters. US wanted to prosecute the bank, which could have resulted in bank possibly losing its license. And if it lost its license in the US, then it could say goodbye to operating anywhere else, because without a US license, it could not really process any dollar payments, and dollar is an essential global currency. So unknown to anybody, the then Chancellor, George Osborne, secretly wrote to the US regulators, asking them to go easy on HSBC. The government did not launch a parallel investigation in the UK to see what has happened in the UK, but actually it asked US regulators to go easy. And eventually the bank was put on probation. But the fact is that the ministers intervened. BAE Systems, it was alleged, had made corrupt payments to secure arms contracts in Saudi Arabia. The Serious Fraud Office launched an investigation. Tony Blair, it is thought, personally intervened to prevent that investigation going any further. Again, we learned more about it through the US. And if you really want to know, you can send me an email. I will send you the papers because I've written about those kind of things in details. We also have a problem when you read the newspapers that accountancy firms are fined millions of pounds for audit failures. Have you ever wondered what happens to those fines? Are they used to compensate the victims, people who lost their pensions, people who lost their jobs, people who lost their savings? None of that. Those fines themselves, until recently, have been pocketed by the accountancy bodies like the Institute of Chartered Accountants. So there you have it. You license somebody to do an audit, they turn out to be incompetent and negligent, they can't be sued, they are fined, and as a result, the body which licenses them becomes richer. So over the years, they have collected millions of pounds in fines from the incompetence and negligence of their own members. So we clearly need to change the regulatory system, and that has to be done. So how do we change this? Well, first of all, we got to understand what the role of regulation is. It is not to protect the industry. It is not to promote the industry. The role of the regulation is very simple: to protect consumers, taxpayers, and the public in general from harmful practices, promoting stability, predictability, and confidence in the system by addressing the problems, not hiding them. It is up to a government department or somebody else to promote the industry, not for the regulators. So we then developed for this Labour study, the full details on the website, on the Facebook page. We then developed this, and we developed what the objectives of regulation should be, which is to promote and protect the interests of citizens, nothing else. We developed some principles. And then we thought long and hard about this. We felt that we needed a regulatory system which has to be independent of government departments, because ministers simply will cover up things. So who should the regulators report to? Our view was they should report directly to Parliament. Now, of course, Parliament is not beyond cover-up, not beyond neglect, not beyond any partisan operation, but that is the best we have at the moment. So we felt regulators need to be independent of the government, and that independence is necessary for them to discharge their duties, that is to protect the people. Ministers should not be able to stymie any investigations, suppress critical reports, or narrow the scope of any investigation. So that is what we decided. We felt that by the time the number of regulators is consolidated, by the time we've thrown out trade associations from acting as regulators, we would end up with very few number of regulators. So just to give you a couple of examples of what our blueprint involved, and that blueprint was provided to Labour, and you may have seen echoes of this in the last Labour manifesto too. So for example, to deal with the world of business, we said we would like to see a business commission. A business commission, not 41 regulators dealing with finance or 25 dealing with money laundering or anything else. We want a business commission. Under the business commission, then there would be further sub-commissions. For example, a commission to deal with the finance sector, because it is huge and can pose a serious threat. A commission, for example, to deal with the world of corporate governance, which would include accounting and auditing as well. And that commission would set the accounting rules, not the current captured regulators. So a companies commission, a finance commission underneath a business commission. Each of these subcommissions would have a supervisory board. So at the moment when I was doing this study, I met the regulators. So we asked them, what do you do? And the standard response was, we serve the public interest. And my question was, so where does the public come in? I looked at your board structure. There's nobody from the public, though occasionally they had a stooge or two. So we then proposed that what we need to do is create a supervisory board made up of stakeholders, that is, ordinary people, so that their views get heard, their views are represented. So indeed, the supervisory board would exercise oversight on the executive board running the regulatory apparatus. They would ask questions about adequacy of resources. What have you done about the RBS frauds or the HBOS frauds? What have you done about the recurring audit failures? And the supervisory boards we propose should meet in the open. All its papers and background papers would be publicly available. And those meetings, people can come and attend, journalists can come and attend and report. So this way we can inject public opinion into these regulatory bodies. So at the moment when you tell somebody, put people on, and they said, oh, well, we need somebody who knows about money laundering or who knows about accounting and auditing to sit on a regulatory body. Funny, they never say a homeless person should sit on a housing regulatory body, but they want people of experience. So this experience facilitates inbuilt capture. We want to break that capture by we wanted to break that capture by putting in people with diverse backgrounds and diverse views. So that was our recommendation. I went for a number of weeks making this presentation to big companies in the city, big companies in London, including organizations in the City of London. They politely listened. Before that, they had invited me to lunches and dinners. I didn't go to any. After I did my presentation, I didn't get any of those invitations, which is just as well. I didn't really want to put on too much weight anyway. So this regulatory apparatus we had designed was to be accompanied by an independent ombudsman. So at the moment, if you've been terribly dealt with by a bank or a insolvency practitioner or an auditor, you don't really have an independent ombudsman. Ombudsman is appointed by the insolvency and auditing regulators. They hire the person, they pay the person. That person has no independence. So we wanted an independent ombudsman to adjudicate. Often those people who are injured don't really have the resources to go to the court. So we wanted the ombudsman to adjudicate. If parties are unhappy, then they can go and seek a judicial review. But that would be the first port of call. We wanted an independent enforcer. At the moment, we have a terrible enforcement mechanism. The Crown Prosecution Service, we have the Serious Fraud Office, the FCA, HMRC, anybody else. It is basically scattered, poorly coordinated, and poorly resourced. So we wanted to see an independent enforcement arm bringing it all together. Now, none of this was going to happen overnight. Our report suggested it may take 10 years to bring this apparatus around, assuming that any government was willing to run with this. So that is a brief glimpse of the regulatory maze, and I'd be happy to take any questions. I can see a number of comments appearing. Shame it is not interactive, but if I figure out where there is a chat appearing here, or any I don't know if it's the same questions. Let me see. No, I can't see. Sorry, I can't. Any questions, please? I'm happy to answer. How do we know if the banks have paid back the bailout money? Well, there is an audit done by the National Audit Office, and it argues that most of that money has been paid back, though there is still, I think, 30 to 40 billion outstanding. What can we do? That is a question, nice question from Maz. Well, we can do what the Back to 60 group has been doing. One is to make people aware of what is going on. People think often a lot of these issues are technical, boring, grey. Well, they're not really. That is what the people in power want you to believe. That is how they disarm citizens. That's how they disarm everybody. But we can do something, and we may be small, but if you play chess, you know that pawns can occasionally get together to overcome a queen and dominate the board. So I live in hope that we can all do something about it. We need to do something, because the kind of regulatory apparatus and the daylight robberies and the looting that is going on, it can't really continue. And there is a limit to this. So at the end, it is really the people who have the power, and they can do something. Another question, sorry, they are coming very fast together. I'm trying to keep pace with them. Is the Ombudsman's decision final? No. You can go to you can still go and seek a judicial review. So ultimately, it rests with the courts. What else is coming? I'm very happy if there is a recording of this, it can go on YouTube. That is one of the questions. Did they bail the banks out with the pension stolen money? Well, I think you're referring to the 18% supplement, which was not paid because Thatcher government reneged on it. That was 271 billion. That is David Henke's estimate, and by now that number is over 300 billion. Well, what the governments have done is use that money to give tax cuts to the rich and big corporations. That is what they have done. We have even got politicians like Ian Duncan Smith suggesting that the state pension age should be raised to 75. And if you look on places like Blackpool, the average expectancy is less than 75. So what they're proposing is to completely deprive some people of any pension. And the paradox is that the people from poorer backgrounds die younger, their life expectancy is much shorter. Rich people live longer, their life expectancy is longer. So that means rich people will receive the state pension for more years than the poorer people. So funny thing is, the state pension, the contributions to state pension are subsidizing the richer people, and then the governments come along and raise the state pension age. There was very little informed debate about it, and even now there is very little informed debate about it. Helena, if you had the support of groups such as Back to 60 group, do you think we can change the status quo? Of course, one always has to live in hope that we can change. Indeed, it is our duty to the future generations that we need to change things. The things as they are now can't continue. And even good old business people, I'm sure, will know that unless capitalism is seen to be ethical and responsible, that they can't really make money, that their business won't really last. And I think, even enforcers like the police commissioner referred from Thames Valley, they recognize that if capitalism is to survive, there has to be an ethical dimension. It can't continue the way it has been. And in the case of banks, as I said, they've been serial offenders since 1970, if not earlier. I say since 1970 because I have conducted studies looking at the period from 1970 onwards, and all the problems exposed in 1970s are still there. Sorry, let me just scroll through. There's lots more coming through. Well, I think we. Sorry, I'm just looking. There's a. It says, if we stay quiet, we are complicit. Well, supporting status quo always means taking sides. There is no such thing as a neutral position. There is no such thing, no such place which is value free. So if we are supporting status quo, we are complicit in such matters, really. So we really got to take side. We got to stand up. If you don't stand up, you will always fall. But let us stand up and be counted. If you look on my Twitter handle, it says, if with all your effort and might you don't reach the mountaintop, that is not failure. The failure is that you didn't even try. That is the failure. And that is a failure which we can't really afford. This is why I'm really enthused by the Back to 60 group, because here are people who are saying, nope, we are not going to accept it. We are going to do something about it. And they're doing something about it. One of the questions flashed by earlier about the National Insurance Fund. Yeah, there is something called the National Insurance Fund where the national insurance contributions go. Those contributions are used to pay, amongst other things, state pension. And the last accounts are published for 2019, and there was a 30 billion surplus. And our national insurance contributions are also subsidizing banks, which many people don't cotton on to. For example, a business which is in administration eventually goes bust. That means it hasn't got enough resources to pay the employees what is due to them for wages, holiday pay, and anything else. Then the National Insurance Fund is raided. That is wrong. And I have argued for a long time that when a business goes bust, employees should be treated as priority creditors. At the moment, there is no such thing as a priority creditors, but we need to create that category. What that means is that employees need to be paid before anybody else, before banks who are secured creditors. So if they were priority creditors, the assets of the liquidated business would be first used to pay employees their wages, which are due, plus any deficit on the pension scheme. Then after that should come banks. The reason for that is very simple. If you look at the risk management perspective, you, I, and everybody else, our labor can't be stored. It just is used as we get older. We don't have opportunity to hold a diversified portfolio, i.e. all our labor is invested in one place. In sharp contrast, banks, hedge funds, private equity hold diversified portfolios. They have spread their risks. Therefore, they have a greater capacity to absorb those risks. They have large amounts of money. We don't. We can't rebuild our pension pot. For those reasons, i.e. from a risk management perspective, it is appropriate that employees should come right at the top. And that is what I have suggested over the years. And it was heartening to see that in a recent parliamentary debate, Ed Miliband MP and also people in the House of Lords, two names come to mind, John Hendy, Lord Hendy, and Lord Peter Hain, and some others also push for the same argument based upon that logic. So would anything happen? Well, not under the current government. I don't hold out any hopes. So perhaps a different kind of government might give us a different kind of a world to live in. But what we have to do is inform people, infuriate them, entertain them, educate them, galvanize them. And in doing so, we may be able to change the narrative, i.e. show them that things are not as they think they are. We may be able to render the familiar unfamiliar, make the familiar unfamiliar. If so, then we have a possible recipe for change. But of course, we are up against organized interests, mainstream media, which will tell us, what some member of the royal family ate yesterday, rather than talking about the real stories of women being deprived of pensions and many other things. They don't talk about that. Okay, what else is coming through? Yeah, Sheila Stewart saying yes, make employees primary creditors. So that would be a new category. At the moment, HMRC taxpayers, that is you and me, we are also unsecured creditors. So let me tell you a story. I was asked by the House of Commons Work and Pensions Committee to prepare a report on the collapse of Bernard Matthews. You remember, used to be ads on telly selling his turkey. So Bernard Matthews years ago was bought out by a private equity company. So what do private equity do when they buy out a business? They put very little amount into shares and they put a huge amount into debt. So what does debt do? It accrues interest. It is a tax deductible expense, reduces the tax bill. Where does the debt come from? Usually from a offshore subsidiary. In other words, whoever is receiving in some offshore tax haven that interest, it will effectively be tax-free. So that is how Bernard Matthews was basically funded. It eventually goes bust. Private equity decides to sell the assets only, not the whole business, just the assets. In other words, if the business has assets of £100 and liabilities of 75, it would sell for £25, but they are only selling the assets for £100 and they jettison the rest, which includes HMRC, pension scheme, supply chain, and other creditors. So I then spoke to Frank Field, who was then the chair of the Work and Pensions Committee. I said, this stinks. So Frank Field's Work and Pensions Committee wrote to the new owners and said, why did you not buy the whole business? They wrote back, and that letter is public. They said, initially we wanted to buy the whole business, i.e. offer 25. But no, the private equity, which was selling it, wanted £100 so that they could get more money and basically dump the amount owed to HMRC and owed to pension scheme members and everybody else. And that is perfectly legal, still allowed. And that is still allowed, and it is happening at a large scale. So anytime you see in the newspapers expression like there is pre-pack administration, if you dig deeper, you will find Bernard Matthews kind of arrangement. And basically the creditors are being skinned, and private equity, hedge funds, banks are basically walking away with most of the money. But if we put employees above them, we could even put taxpayers above the banks if we wanted to. That would make these people think twice about what they're doing. At the moment, it is too easy. What else? Any other questions? Sorry, let me just scroll down. There's a huge number of questions coming up here. I had initially prepared a set of slides, but I didn't know how to show them on the Facebook page. I could send those slides to the Back to 60 group, and you can read some of the words which I spoke. They're on there, and some further information. You can also read the report on the regulatory architecture, how to redesign it to protect the people and promote the public interest. The full report, it is over 100 pages. And as I said, it took us about a year, 18 months to complete it. That is on, there's a link on it on the Facebook page. But I will send my slides to Joanne and Anne to see if they can circulate them. And if you do have any questions, of course, I'd be very happy to come back and respond to you the best I can. But I'm also constantly learning as I'm looking at a lot of these cases. And remember, I've only been able to talk about what is in the public domain. What is buried, who knows? How many times the ministers have intervened to conceal malpractices? I don't know. So I only refer to what is in the public domain. Rest, who knows? Can the trade unions help? Absolutely. Trade unions have to play a role in this. As you are interested in pensions, trade unions over the years have taken little interest in state pension. Often they think their role is about the wages and the working conditions of their members and possibly what is contributed to the employee pension scheme. But I think they have paid very little attention to the state pension. And I think that is something they really need to address. My view is that the state pension is utterly inadequate, and the state pension should not be less than the national minimum wage or the living wage. So the current state pension is somewhere between £7,000 and £9,000 a year. Let us ask the ministers who fix it to live on it to see if they can. They can't. And so I think we should be saying it should not be less than the national minimum wage, which is currently about £17,000 a year. That is the minimum wage. That the government recently decided during the pandemic that people needed £2,500 a month to live on. And that is what amount was paid to furloughed staff, maximum of that. So 2,500. So we are not even asking for that, just asking for the minimum wage. And that would give people a chance to live without thinking about buying food or heating or anything else. So I can't see why the governments can't afford it. I did a seminar last week. I'll be happy to return and do it on state pension. I did one last week for a TUC sponsored group, and I showed them how we can get the resources, where the money is, and how it can be used. So is it affordable? Perfectly affordable. Those people who want to end the triple lock, or everyone who's written about ending the triple lock, I'm sure has an income of bigger than the state pension. And not only the triple lock, we need a far bigger increase in the state pension to reach the target of the national minimum wage. That is what we need to do. I think I may have bored you by now and exhausted you. Just flicking through lots of other comments coming along. People agreeing, which is good to see. People are galvanized. That is wonderful. So one of the things people say to me when I speak, people say, I am busy. I have job to do. I got children. I have work pressures, which is absolutely right. We are all under pressure, and nobody in this world can do everything. But the truth is, everybody can do something. What I can do is bring to memory what is forgotten, what is ignored, what is marginalized, possibly design regulatory systems and do other things. Everybody can do something. Nobody can do everything. So pledge yourself to doing something to make this world a better place. We live in the world's sixth wealthiest economy. People don't have to queue, should not have to queue for food banks. People should not be living on state pension of £7,000 to £9,000 a year. When you look at the HMRC statistics, it is horrible to notice that only 58% of the individuals of adults in the UK pay income tax. The other 42% do not pay income tax because their annual income is less than £12,500 a year, i.e. less than the personal allowance. Now, what has happened that in this country, in this day and age, 42% of adults have an income of less than £12,500 a year? That is unacceptable, should not be accepted by anybody, and we have to challenge that. Okay, well, I think I'll go off. I can see my wife is getting my dinner ready, and I hopefully I will get an opportunity to speak to you again in the near future. So thank you for putting up with me, and I look forward to speaking at another time. Thank you very much.